The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your competence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be diving a bit deeper into understanding parabolic trade setups, but also just the daily process of identifying one or two opportunities in the session that you're trading. Essentially, it boils down to the daily process for identifying the best candidates, whether you're hunting a trend trade opportunity or a reversal trade opportunity. There are only three things that markets do. They break out and trend, they break out and reverse, or they stay range bound between a high and a low in a trading range. Depending on the conditions of the markets, we may only be able to hunt out a 3-session setup on the day in the session that we're trading, or as the week evolves, or if we have a candidate, we may already have a 3-day setup, whether that's a Thursday, Friday, Monday, a Monday, Tuesday, Wednesday, Thursday, Friday, Monday. Now, there can be different combinations as we've gone over, but that can offer us a range expansion or a range reversal opportunity. We've talked about signal days from the playbook, inside days, first red day, first green day, 3 days of breakout traders in the market, and markets that close in breakout. The most important question, though, is based on any of that criteria or any method that you apply, is what type of setup are you hunting? Anything that breaks a high or a low, any day, any time. Anything that closes in breakout, anything that is moving, anytime, anywhere. Any instrument, or do you hunt out specific setups that you have mastered on any instrument? I'm going to talk about the two main templates on the day of the trade itself, the dump and pump template or the pump and dump template. 3 levels that every trader has on any instrument when they come to the screen each day. They have the high of week, high of day, previous high of day levels, low of week, low of day levels, and they have closing price. When the week starts, Friday's closing price is where the auction process starts from. Now, the next question is what your goals are. Is your goal to be trading all day, every day, or to make a certain amount of money, or to execute trades, whenever you find them? Your goal to trade only at specific times based on criteria, if it's met, or if there's trades or trading movement at specific times, or do you only hunt out specific setups at specific times if and when they show up for scalable opportunities? Scalable trade setups, the ACBs, the ain't coming back. So just sitting and waiting until those opportunities present where you have the highest probability of a market potentially moving in one direction, driven by other time frame traders. When we have other time frame traders in the market outside of these weekly boundaries, everyone is on board the train potentially if we have a trade setup. I refer to this certain types of trades during the session, a 3-session setup, as the MCBs. They might come back on the front side and even the back side, or hunting out the 3-day setups, the ACBs. They ain't coming back because we have everybody on board the train driving that move. Monday's opening range in a new week. That's what sets the initial high-low when the week starts trading. Friday's closing price is where the auction process begins from. So my thought process is I'm looking for 1 or 2 scalable opportunities during the week. And during that waiting process for markets to set up for a larger ACB opportunity, each day we could be hunting out session opportunities if indeed they present. Now, I look at a basket, the metals, the indexes, the energies, and the currency markets. Front side, we can look for nail and bail opportunities. Sometimes we'll get a larger ACB opportunity on the front side of the week. On Thursday on the NASDAQ, we have a day that's made a new high of week level on the backside of our week. Friday is an inside day. Monday, when we come to the screen, the market is already trading and moving away from closing price. It breaks out and closes in breakout on Monday.
the opening range in a new week. We've broken outside of September's high of month level, and that is a signal. Now, for traders in the Asian or London session, they may have been trading this, but for me, coming to the screen, this market's already moved away from the level. I've left this alone. That's the day one runner we talk about, but it closes in breakout, and that's a potential signal for Tuesday, day 2 on the front side of a new week. This is potentially a trade setup. Now, I'm not worried about this in here. I'm looking at a market when it closes at the end of the day. Day 1, Monday's the opening range. We've closed in breakout outside of our high of month level. Simple thesis on any of these markets, if it's a pump and dump template, I'll get a close in breakout, the pump day. Now, how does price behave and set up on the day? We could have a first red day. It doesn't set up on the consolidation day. It could turn into a first red day for a dump on the third day or the fourth day on the backside of the week. But how does price behave on the day? I'm looking for setups, not trying to trade the movement. I'm waiting for this market to potentially offer us an ACB opportunity. The important thing to understand is that if a market's in breakout, we have other time frames involved in the market now. They've broken out of a weekly level. We may now have breakout traders trapped in this move, traders that have gone long at the high of month or high of week level or trading in the US session now are above these levels or holding these positions overnight on longer time frames. New York equity markets open at 9:30 a.m. New York time, and we have a pump and dump 3-day template set up now for a larger scalable opportunity. Now, differentiating that from a session scalp or comparing this template to a market that offers us very little edge in the market. And we're looking at Thursday's Dow Jones 30, and if we just crunch this chart up a little bit tighter, again, comparing what a clean template looks like, a well-engineered chart. Now, some traders may have gone long earlier in the day and held this into the close. When we come into our US session, though, this is a difficult market to navigate and to trade with any size. Contrasting that again with a market that goes in breakout and consolidates at the level into our timing window. I mentioned the phrase, train your eyes to move horizontally at the level. This particular day, if traders are looking at this as an opportunity or their favorite instrument, we're training our eyes to move horizontally at the level, I'm forced to trade this further and further away from the level in a market that is auctioning in a choppy, messy fashion. We're looking at the S&P 500 and just an example of where, as we have markets that break out and we establish new boundaries, again, training our eyes to move horizontally at the levels, not getting caught inside in poorer quality market conditions. So again, understanding what setup are you hunting. The time frame of the chart itself is irrelevant. We're looking at silver here. These are all 5-minute charts. We have Friday's closing price starting our auction process. We don't have any weekly levels broken. And this is an example of a trend trade. The market auctions down first without triggering a weekly level until Tuesday, taking out the high and auctioning higher. Now, I talk about the opening range and initial balance. In the playbook, page 26, the importance of understanding that the market is building a box. Now, we can have 3-day setups that the process is about identifying a larger rectangle for a geometrical range expansion opportunity. And what does that mean? Well, we have a larger box being built. Monday's day 1, the opening range. Tuesday, day 2, we now have our initial balance. The market continues to auction higher, expanding the range, a range expansion on day 3. I repeat the same things because I'm looking for the same setups every week, the opportunities. Paul Tudor Jones, when you get a range expansion, the market is sending you a very loud, clear signal that the market is getting ready to move in the direction of that expansion. Now, if the market's going on a range expansion, what you don't want to be doing is counter-trending a market that is now potentially going to make a larger move. We have a market that has made a peak formation low inside of the previous week's range, broken out, made a range expansion and a peak formation high, day 1, day 2, day 3 on the front side of the week. Again, we'll just go back to our understanding of Friday's closing range. That's where we can have other time frame traders potentially already in the market closing in breakout or triggering new other time frame traders when the new week begins. Day 1, day 2, day 3, Wednesday, the reset point, the midpoint range of the week, heading into the backside of the week. Day 1, day 2, day 3. Now potentially hunting out a 3-day setup as the week has expanded the range. We talk about the day 0 setup. That's the 3-day setup, peak formation high, peak formation low, and consolidation. Page 84 in the playbook. Repeating that this is a 5-minute chart. The levels have nothing to do with the time frame. You could use a 4-hour chart. You can use an hour chart. You can use a 15-minute chart. The levels are still the same. It's irrelevant. But when we're talking about a 3-day setup, we're talking about classical charting principles where we potentially now have a range expansion, a geometrical rectangle. Edwards and McGee, Schabacker, Peter Brandt, classical charting principles, where we're targeting asymmetrical risk reward for these range expansion opportunities as they build over the longer time frame. This includes all time frames driving this move. And what we don't want to be doing is trying to counter trend a market that is now on a range expansion. Now, some traders, what the point of this is understanding that doing nothing all week on this instrument and waiting for the closing range of the week using our universal basic model for trade entry criteria had an easy range expansion scalable opportunity on Free Cash Friday. My point being is that all the other movement in here where traders are trying to catch a move as opposed to waiting for the larger scalable opportunity to build over the course of the week. Day 1, day 2, day 3, front side, and then larger 3-day setup scalable opportunity heading into day 1, day 2, day 3 on the back side of the week. Now we're looking at West Texas oil. Monday, the opening range closed in breakout outside of the previous low of week level. Just coming back to what I said just a moment ago about training your eyes to move horizontally at the levels. In the U.S. timing window, we've already moved away from closing price and continue to auction lower on Tuesday, day 2. A range expansion making lower lows on the front side of the new week. Lower lows and lower highs heading into Wednesday, day 3, the midpoint range of the week. As we head into Thursday, again, training our eyes to move horizontally at the levels. We have lower lows and lower highs heading into the close of the day. We're still making lower highs and lower lows. This is what brought up the question regarding oil. Traders said, but it was a first green day. We're in a market that closed in breakout and continued to make lower highs and lower lows. Tuesday's closing price is still acting as a ceiling as we head into our Friday timing window for the U.S. session. Now, Friday is the closing range of the week. And so, again, we have a market that now could potentially still be in a trend, a downward moving market. The market is pumped up into these levels as opposed to dumping down. Remember what I said earlier, there are two types of opportunities if indeed they present on the day after a signal day, Friday's day 3. Do we have a well-engineered dump and pump or pump and dump template? Rectangle, we have Wednesday's high, the midpoint range of the week. Thursday's low is our low of the week, our new low of the week level, and our high low and a 50% level as we head into our US window. And at our 50% level, we also have our lower low made on the day. We have our pump, our peak formation low underneath closing price that's been made on the day itself, a peak formation high into closing price level. So we've pumped up into Wednesday's lower high of week level, into Tuesday's closing price before breaking down below Thursday's closing price, coiling sideways. 9 a.m., the old oil futures pit opening times for the parabolic range expansion, the continuation trade on Friday, day 3 on the closing range of the week. Also, if we take a high-low of our little rectangle made prior to the open, we can project a 200% expansion as a profit target for this trade. A trend trade opportunity on day 3. Most importantly, though, understanding why this is not a first green day trading setup. we have a pump and dump template on a market that is already in breakout to the downside. We potentially have other time frame sellers above these levels driving this move. Looking at the euro, and again, just an understanding of Monday is the opening range in a new week. We start from Friday's closing price level. That's where the auction process begins from. Thursday is the low of week level heading into our new week. That's the low of the previous week. So as the market begins to trade, we are inside on Friday. The market works its way down, triggering breakout traders into the market on other time frames towards the end of the US window. But you'll notice the close is still inside of the previous Thursday's range. It makes a lower low. Paul Tudor Jones, if a market is giving you an indication of a range expansion, it's sending you a clear signal that the market is potentially getting ready to move in the direction of that expansion. So coming back to understanding, we have a market that has closed in range on Monday, day one, but it's made lower lows. And it's also giving us a signal day, a first red day. We had an inside day on Friday. We have inside bar traders now in the market triggered. This is not a false break. A false break reverses and goes towards the other side. We now potentially can be in a market that is offering us a trend trade continuation in the session that we're trading. The inside day false break or trend trade opportunities, page 69 in the playbook. Now we have a market that's made lower lows at auctions lower, and traders in the Europe-London window may have potentially been looking for the reversal trade back up to closing price. Now understand, this is a scalp, but we also now are potentially in a market that is moving lower. So trading against other time frame sellers that could potentially be driving this move. The US session has the low-hanging fruit trend continuation opportunity on day 2, which typically expands the range, lower lows. The low-hanging fruit trend continuation trade, page 96 in the playbook. Now I want to reinforce we may have other time frame sellers driving this move as we head into Wednesday, day 3 on the front side of the week. And I want to point something else out here. We now have a market that has closed outside of the previous week's range. So often traders are getting caught inside of the price action and they miss the larger picture of a market that has now closed in breakout outside of the previous week's range. We may now have a market that is going on a range expansion of the larger geometrical structure, the breakout of Thursday, Friday, Monday's range on the front side of a week. So for traders who are looking to hold a position longer, we now have a market that could offer that continuation trade on day 3 in our timing window. So we have lower lows made in our Europe-London window. They pump it back up. They get order flow buying, trying to buy the low of the week when this is now a market that is potentially going on a range expansion in line with the breakout of our larger 3-day geometrical rectangle. On Thursday, major red news acted as a catalyst to complete that 100% expansion of the range. And Friday, our closing range closes back inside of Wednesday's closing price, the midpoint range of the week. This comes back to just some simple questions again, and that is, what types of setups are you hunting? There are basically 3 types of opportunities, and essentially there's directional trades where we can buy or sell and hold them because we have a bias of where that market might be moving to. We're willing to just put a position in the market, take it off at close or hold it for a couple of days in line with a directional move. Or are you targeting parabolic other time frame trade setups in the session where you're prepared to scale in because they have other time frames driving a parabolic move? Or we have session scalps, as we demonstrated. They could be counter trending the larger time frame, but there's still opportunities where the market is reversing into those other time frame traders. And as the templates build over the week and we have larger geometrical structures, we want to be making sure we're not counter trending a larger range expansion trade. So just coming back to some simple understandings that on the front side, we can have setups that are going to be session trades. We're not worried about pushes, gaps, sweeps, discounts, all these crazy things. What setup are you hunting? There's specific setups. What easy money making trading setup are you hunting each day or each week? Now, I'm prepared to sit on my hands to look for one or two scalable opportunities that are driven by other time frame traders that offer a range expansion opportunity. Catching moves, grabbing some pips are where traders can potentially put themselves at risk. Repeat, the behavior of the trader is the most important variable that can do damage, whether you have an edge or not. And it's important to just be willing to sit on your hands and hunt out specific rinse and repeat setups where you have an edge in the market. If you're just trying to trade every day, that can lead to emotional, impulsive, and irrational behavior and often sabotage the good results that you do generate. And it's consistently important to build your trading business on a daily process and setups that rinse and repeat and allow you to grow your trading account. And my favorite, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. My mentality is to sit on my hands and wait for one or two scalable opportunities each week with size. Ones that can be traded with size and they repeat frequently, rather than taking 10 to 20 50-50 trades with no size or no real edge in the market. That's me. That's what I like to do. I'm quite content to sit and wait and hunt out setups that have edge. And the question is, what setups are you hunting? What is your goal and objectives, and how do you want to trade? I definitely don't want any science projects. I have zero interest in these types of market conditions. I know some traders may disagree with that, but my opinion, my belief system, my approach to the markets is I have zero interest in looking at a chart like this. And I repeat again, what setups are you hunting? I'm hunting out parabolic opportunities that rinse and repeat that are ACB trade setups. Simple, repeatable, and scalable. What setups are you hunting? Traders, keep it simple and repeatable. Less stress, less emotion, zero thinking, and an example again of zero management. Once this trade takes off and goes, there's nothing left for me to do. Day 1, day 2, day 3. Keep it simple, repeatable, and scalable. And may the markets go with you.